Welcome to this summary of Digital Gold, a book by Nathaniel Popper, a Harvard University graduate who currently works as a business reporter for the New York Times. Digital Gold tells the story of the many different individuals, including cypherpunks, nerds, investors, gamblers, and visionaries, that contributed to the rise of the world's most successful cryptocurrency, Bitcoin. The book gives an overview of the way Bitcoin developed, showing how its value rose from nothing to over $1 billion, and telling the story of its troubled early stages. For millennia, humans have relied on physical money for transactions. Yet, in our modern digital era, some argue this system is outdated. Enter Bitcoin, a cryptocurrency challenging traditional currency norms. If you're unfamiliar, this summary will introduce you to Bitcoin's origins and its rising prominence. In this summary, we will cover the link between Bitcoin and the Occupy Wall Street movement, the communal management of Bitcoin and its rationale, the formidable security measures making Bitcoin highly resistant to hacking. But before we begin, please subscribe to our channel and like the video to help us grow. Now let us continue and delve into the key highlights from this book. Part 1. Bitcoin is a new kind of money that is created, held, and transferred by its users. On January 9, 2009, an enigmatic internet user, operating under the pseudonym Satoshi Nakamoto, introduced a revolutionary concept, Bitcoin. Bitcoin stands apart from traditional currency systems in several ways. First, its open source code allows anyone to participate simply by downloading it. This openness enables transparency and community collaboration, unlike closed software systems such as Photoshop or Microsoft Office, developed by a limited group with exclusive access to the code. Furthermore, Bitcoin operates without a centralized authority. Instead of private bank records, all transactions are recorded in a communal database known as the blockchain. This decentralized ledger is distributed across every computer in the Bitcoin network, ensuring transparency and security. Although less private than traditional banking, Bitcoin offers unparalleled accessibility and anonymity. Users can create multiple wallets with just an email address, and there's no limit to the number of accounts one can own. Bitcoin enhances security through advanced encryption techniques. While conventional transactions rely on basic PIN numbers, Bitcoin employs robust public key cryptography, virtually impervious to even the most powerful computers. Public key cryptography involves private and public keys. When a Bitcoin transaction occurs, the public key is recorded in the blockchain for all to see. However, only the transaction's participants possess the private keys necessary to access the funds, bypassing centralized security measures like those employed by banks. Part 2. Bitcoin embodies a new way of communally handling money. Following the 2008 financial crisis, global interest surged in alternative monetary systems. Bitcoin, at its core, embraced communal management as a foundational principle. Two critical aspects of Bitcoin, the maintenance of the blockchain and system updates, are both managed communally. The blockchain, constantly updated with new transactions, ensures a unified ledger across the network, safeguarding against fraudulent activities like counterfeit transactions. Similarly, system updates require majority approval from Bitcoin users, preventing individual manipulation and fostering community-driven decision-making. Proposed modifications undergo extensive discussions on Bitcoin forums before implementation. While Bitcoin isn't impervious to threats, such as a hacker controlling a majority of the network, the robust encryption ensures protection against unauthorized access. Even if a hacker were to gain control, they could only affect their own transactions, unable to tamper with others' Bitcoins. Part 3. Bitcoin's first surge of popularity came from the drug trade on the underground website Silk Road. Many are familiar with the hidden black markets operating globally, but few know about their online counterpart nestled within the darknet, accessible only through anonymizing software like TOR. Enter Silk Road, a marketplace within the darknet where buyers could purchase illegal goods, primarily drugs, and have them delivered discreetly. Bitcoin seamlessly complemented Silk Road's anonymity, offering irreversible transactions that boosted sellers' confidence and provided buyers with a sense of security in their transactions. The symbiotic relationship between Silk Road and Bitcoin fueled the growth of both platforms. As Silk Road expanded, so did the value and popularity of Bitcoins. In just a few months, the value of a single Bitcoin skyrocketed from $1 at Silk Road's inception in February 2011 to $30 in June 2011, spurred further by media attention and government scrutiny. Bitcoin's role in Silk Road transformed the marketplace into a libertarian's utopia, a self-regulated, decentralized entity beyond government control. By March 2012, Silk Road boasted 10,000 registered users conducting transactions totaling $35,000 daily across vendors in numerous countries. Despite its success, Silk Road met its demise in September 2013 when its owner, Ross Ulbricht, was apprehended after unwittingly sharing incriminating information with an undercover FBI agent. However, Bitcoin's value remained resilient, reaching $140 per Bitcoin by the time of Silk Road's closure. Part 4. WikiLeaks and Occupy Wall Street highlighted Bitcoin's capacity to take power from financial institutions. Cypherpunks, anarchists, and supporters of the Tea Party may seem unlikely allies, but they share a common aversion to government control in society. This distrust is often justified, as seen in instances where governments exert influence to stifle dissenting voices. For example, when WikiLeaks released a trove of confidential documents in 2011, exposing the inner workings of American power, the U.S. government retaliated by pressuring financial institutions like Visa, PayPal, and Western Union to cut off donations to WikiLeaks, crippling its finances. In response, some suggested that WikiLeaks accept Bitcoin donations. While debated among Bitcoin developers, the idea was ultimately deemed too risky due to potential government scrutiny that could hinder the currency's development. However, the incident highlighted the appeal of decentralized currency in the face of government overreach. This sentiment was echoed by the Occupy Wall Street movement, which, like its counterparts in Spain, protested government bailouts favoring big banks over ordinary citizens. They saw Bitcoin as a means to receive donations beyond the reach of central authorities and to safeguard funds from market volatility. The Occupy movement's interest in Bitcoin was further fueled by discussions at concurrent Bitcoin meetups in New York, where enthusiasts envisioned an alternative economic system free from centralized control. Part 5. Argentina's financial crises have shown how Bitcoin can transfer power from governments to the poor. The citizens of Argentina have endured numerous financial crises and bouts of severe inflation throughout their history, prompting interest in alternative currencies. At the second official Bitcoin meetup in Argentina, attendees were enthusiastic about the potential of this new digital currency to circumvent government restrictions on the Argentine peso's value. Government-imposed measures, such as artificially high exchange rates for the US dollar, PayPal transaction bans, and fines for dissenting economists, fueled the appeal of Bitcoin. For instance, while credit card transactions faced delays and unfavorable exchange rates, Bitcoin offered quicker transactions and better conversion rates. Moreover, Bitcoin provided a means of safeguarding funds from government interference, a concern amplified by the difficulty of accessing banking services in Argentina. With a history of currency devaluation due to rapid inflation, Argentinians saw Bitcoin as a stable alternative for storing wealth, despite its limited usability within the country. Since early 2013, the Argentine peso has depreciated by an additional 25% against the US dollar, while Bitcoin has experienced an astonishing 860% increase in value, further solidifying its appeal as a reliable store of value in Argentina. Part 6. The Bitcoin protocol has many advantages over typical currencies, far beyond storing and transferring money. Similar to how the internet liberated information and communication from postal services and major media corporations, some foresee Bitcoin freeing money from the constraints imposed by banks. One significant advantage of Bitcoin over traditional banks is its ability to transfer funds instantaneously. While modern technology enables rapid data transmission and communication, bank transfers often lag behind, taking multiple days to process. This outdated system was highlighted during the financial crisis when a major bank, J.P. Morgan Chase, urgently required funds from a bank in Japan over a weekend. The only option was to issue a $9 billion paper check and send it by mail, delaying the transaction significantly. With Bitcoin, such transfers could occur in milliseconds. Additionally, Bitcoin's digital nature aligns well with the internet-based economy. Its universality allows for borderless transactions without foreign transaction fees, and its divisibility enables microtransactions with minimal fees, revolutionizing online services. Beyond finance, Bitcoin's underlying technology, the blockchain protocol, offers versatile applications. Its robust verification system fosters trust in various scenarios, potentially replacing traditional legal systems for contract validation. With the transparent and immutable nature of the blockchain, witnessing contracts or wills can be done publicly, eliminating the need for intermediaries like notaries or solicitors. Bitcoin has the potential to reshape the way we perceive and utilize money. Yet, its most innovative applications are still waiting to be discovered, promising further disruptions across various sectors in the future. The key message is that Bitcoin, a virtual currency, operates independently from traditional financial institutions, offering users unprecedented control over their funds. Through its robust encryption and decentralized structure, Bitcoin diminishes the influence of governments and banks, enabling individuals to conduct anonymous, secure, and swift transactions globally. And lastly, thank you for watching this video, and please like the video if you enjoyed it. Also, let us know what you rate this book in the comment section down below and what book we should review next.